But so going to kind of move on. Another question: loans available for this bailout for landlords, and then really, as far as from a relief standpoint, there's been the different relief. There's been different funding grants out there. A lot have run out. I have clients in different situations. Some have been having to take discounts effectively and on their rent and sign off on that. So does that mean when the lease comes up for renewal, I'm just raising your rent the 10% I lost during COVID? A lot of things are going to happen. Right now, I know that they're saying they're going to extend the rent moratorium. And again, it's all speculation, but all of you that are landlords, you have property taxes and utilities and insurance. There's nothing aware of that. I mean, any grants or relief or bailout as of today that I'm aware of. Those of you that are on this, right now, I would say reach out to your bank for rounds of PPP2 funding that's opened up. And anything, open up that communication, get that. Those of you that had any EIDL loans out there that applied, one thing I would say, read the terms of your loan. I have people that took those and didn't read the terms, and depending on the dollar amount, $20,000 loans had different terms than the $150,000 loans. And arguably, there's people that are using the funds not necessarily what's prescribed in the loan document. I don't know that they'll have an issue, but with every program, somebody's going to have an example made of them. So I don't want it to be anybody on this call. So double check your loan documents. If you just did the DocuSign and never read them, there's some language in there that and sometimes is a little bit too cumbersome. Other times it's not. And I have other clients that know the risk and are running the risk. So that's fine. Then so one question. Oh, and then another question: QuickBooks Desktop versus QuickBooks Online. I personally like QuickBooks Online because QuickBooks Online, a client can share access with me. QuickBooks Online has a cost per entity, where QuickBooks Desktop, you can buy it one time and install it. I have a client that actually just set up 5 companies. He set up 5 versions of QuickBooks, and his monthly QuickBooks is probably going to be about $200. And he's running his business like a business and actually having a great year and already on his way to have a great 2021 year. So again, it's a cost. And I have clients that use QuickBooks and their records are a mess. And I have ones that use spreadsheets and they can track everything. Really what's going to work for you and what's going to work to be able to give it to your advisor. But the biggest thing is, I think one of the mistakes a lot of investors make is not really knowing their properties. It's times like COVID that a lot of them, I think felt the pain of their business. But those of you on a flip, are you able to see what your profit is on the flip, where you are over, under on budget, doing a budget to actual analysis? You'll be able to start to do those items, a different analysis with a computerized accounting system. I think someone earlier mentioned working with bookkeepers, not getting the information they're looking for. And it's really key as you're running your business to get the different KPIs, key performance indicators that you need to run your business. I think those wholesalers on this call will know how many calls they make to get an appointment and how many appointments they need to get a deal under contract. They could tell me that all day long, but they can't tell me how much money they made last month and how many deals. So And that same philosophy goes to whether you're flipping houses, um, anything you're doing. So the better your records, the better handle you can get. You could make money, but you could also grow yourself out of business with cash flow. You can effectively be losing money, but have a lot of activity and effectively robbing Peter to pay Paul. A lot of home builders I've seen do that. And effectively, when sales dry up, they go out of business and bankrupt. So learning your financials, and if anybody's interested, maybe we could walk through something, what those mean. I know balance sheet and income statement and rent rolls and profit and loss by property make a difference. Those of you landlords, how many of you own properties that you have some real dead property, dog properties, and some great ones that are cash flowing? Does it make sense for you to sell your non-performing properties? Could you sell them in this hot retail market right now? Something to consider. If you unloaded some, you could lock in some great gains at low capital gains rates and effectively put cash in your pocket and decrease the future funding that they've been absorbing from you. So if you know
Selling for
that,
top dollar right now.
oh yeah, and if you know those different things and those numbers, you would know which property to sell. Then there's a question about LLCs saving money on taxes. Uh, an LLC in and of itself versus an individual isn't going to save you money on taxes, as opposed to having an LLC and good behavior, such as an accounting system and disciplines of where your money's going, is going to help you understand your business and running your business like a business. But effectively, as I stated, if you're a Schedule C proprietor, what used to be called a sole proprietor, flipping houses, or you're a Schedule E guy, anything related to your business with a business purpose is going to be deductible. I will say that in LLC, I spoke with somebody last year that went to a bunch of courses, did a bunch of advertising, incurred about $25,000 in expenses, and never did a deal, or at least I think closed a deal. So he effectively had a bunch of income, or I mean expenses, was running as a business, but he had a W-2 job. IRS actually allowed his Schedule C loss. Then the state of Michigan disallowed it because they said it effectively wiped out half your income, and it was what's called a hobby. And all he had really to show it was a business was business cards in a PO box, and disallowed his Michigan refund. Since then, he's moved to Florida and stopped in real estate. So arguably, he never really got started. But had he had an LLC or S Corp, it probably never would have been an issue. That's just the odds. It wouldn't have saved him and he probably could have. I don't know if he could have fought it. It wasn't worth hiring me to fight it. He lost like an $800 refund, and I said it'll cost you more. And during COVID, I can't even get him on the phone, so to spend the time. But then but really having a business structure, I always say treat your business like a business. I have investors that personally own a bunch of properties or in disregarded entities and run it as a business. Other ones that have 5 LLCs and S Corps, and everything's a mess. So treat your business like a business. Another question. So the tax rate on the recapture, so the recapture effectively is going to be a blend between capital gains and ordinary. On that example of 30,000 earlier, the 20,000 is going to be recapture at a blended rate, because you have to think it was depreciation that caused it to go to zero. I depreciated $20,000, which offset ordinary income. And then That additional 10 is going to be capital gains, which right now is a lower rate. Again, they both could be the same in the future. I don't know, a $30,000 transaction in real estate might effectively not be taxable if that's the only one you do that year. A $30 million transaction is going to be subject to huge taxes. So again, real estate is just bigger sticks and bricks, bigger pieces and bigger numbers, but um, just each deal and really the concepts. Sometimes the smaller deals, I say, don't get lost in the details, but it's all worth looking at. But if you sell 10 $30,000 houses, that's 300,000. That's nothing to ignore. So another question, when do you have to do 1099s to contractors that are S Corps? And what about people that provide materials but not labor? So right now is 1099. Those of you that are on the call, any of you that prepare or pay any of your contractors greater than $600, and that's not 600 per house, it's 600 per entity. So I own one LLC that owns 12 houses, and I have a contractor I pay $100 per house. I paid him $1,200. I have a 1099 obligation. I always suggest have them fill out a W-9, and then from the W-9, you'll be able to determine if they're an S Corp, C Corp, LLC. If they're an S Corp or a C Corp, you don't have to give them a 1099. Any other entity, give them a 1099. If you give someone a 1099, you didn't have to, there's no harm done, but arguably if you don't give somebody a 1099 that should receive one, then there could be a problem. And then if they're an S Corp, you don't have to give them a 1099, and you're paying for services. Buying materials such as like Home Depot or yeah, and I'm going to pull Vale out here. I see his picture. I buy it from Vale's Building Materials. I get all my wood from. That's I don't have to give him a 1099. But Vale's Construction Services, I give him $10,000 to do a kitchen for me. Of that, he pays his guys. He has materials. I give him the 1099 for $10,000. Of that, he might give 1099s to his guys for $2,000. The rest was materials and his profit. If he's reporting his income, assuming he has other jobs, he doesn't care that I gave him a 1099 because he made $15,000 because he worked $5,000 for somebody else. So getting a 1099 to somebody that's doing everything they need to do, I wouldn't care. I don't give me a 1099 if I'm reporting all the deposits in my bank account. I'm probably going to have more deposits in my 1099s anyway. So that's fine. But the people you buy materials, if I'm buying materials from Val and from his business that's in the business of materials, I'd say no 1099s. If he's a contractor buddy of mine and I buy $1,000 of wood from him, plus I do hire him for contracting, I'd probably just give him the 1099 for the total amount. If it was a major amount, we might discuss it, but arguably if it was Val and not a business, they would say that was I hiring him for contracting or actually buying wood and then also hiring him for contracting. So debating over the number, I'd say do both of them. Someone else asked about flippers and self-employment taxes. So flippers, if you're flipping houses, that's what I referred to as Schedule C, ordinary income. If you're flipping one house, a Schedule C, I would say there's no salary in that case. But let's say you're flipping 10 houses and you own an S corporation, and I do 100,000 a year in profit. That 100,000 on my Schedule C would be subject to income tax and self-employment, 15% for self-employment. That S Corp that does 100,000 in activity, um, is not subject to self-employment. But then if you don't do any what's called reasonable compensation and say that 100,000 is all owner's distribution, effectively a dividend, IRS will say no, it's a effectively all salary and they'll back charge you. So usually I work with clients on what's a reasonable compensation. Is it 40,000? So 40,000 would be subject to the equivalent of self-employment, meaning the Social Security and Medicare, but the additional 60 would be insulated from that. Again, those numbers, it's going to be a case-by-case basis. What's reasonable compensation is going to be something myself and the client would determine. Usually owners put themselves on the payroll. If it's a one-man show, that a lot of them will pull distributions throughout the year, and at the end of the year, true everything up with one year-end bonus check. So let's say I take 100,000 out of my S corporation, December 31st, I do one bonus check for that difference, or for a 40,000, the net amount I would reduce my distribution by. Um, so you don't necessarily have to be on a weekly or biweekly payroll. And I err on any of you that are going to start a business and register for an EIN number. I usually do not apply for payroll taxes or get registered for them unless you're actually going to hire employees. If you're just checking the boxes to get started, payroll taxes are the biggest pain. Even not reporting those forms are the biggest pain to get cleared up. And right now, a lot of the tax relief has provided employers an opportunity to defer. So let's say I work for a contractor, I have my withholding and my Social Security and Medicare to stimulate the economy. They've allowed them to defer their contributions. And if they can defer that, that's fine. But think about it. You've withheld that money. You owe it to the government. If you go spend it on a bad flip, you could end up multiplying your problems, and payroll taxes are the worst to get involved with. Those of you that have payroll, I say hire a payroll company. I don't want to do your payroll. There's professional payroll companies out there. It's worth it because I can tell you that's the fastest way. I've seen small businesses. A local investor came to me, had a $7,500 payroll, but didn't file all the forms after they got rid of the employee. $10,000 in penalties later and a couple garnishments in their bank account. Came to me, had another $10,000 in penalty and couldn't figure it out. I said, well, you didn't file all the forms you were required. You should have closed the account. Well, I stopped payroll and I just stopped paying them, but they never closed it. It's the hardest thing to close once you start. So those of you, don't check those boxes until you actually get payroll. And those of you that need payroll or whatever, I can refer a payroll company to you, but I prefer not to do it myself. I don't want to deal with it.